But Anand Shah is head of PMS and AIF investments at ICICI Pru Asset Management Company. Anand, great to have you with us here on the program. Thanks very much for your time. Anand, actually, I want to start with that last group of stocks that I was talking about, which is the hospital names. I mean, do you own any of these names? You know, it's seen as a structural kind of a story. The need for quality healthcare is a felt need, and hospitals are getting more organized. Consolidation is happening. And of course, there is a lot of both brownfield and greenfield capacity addition in the sector. But recently, we've heard from the Supreme Court essentially asking the center to standardize procedure rates. We've spoken with some hospital companies, and they're actually saying if this is implemented, it's going to be pretty bad news for profitability. Just wanted your thoughts as an investor.
Hi, very good morning. This is part in a way as the per capita income moves, and we have seen this, the consumption of the household will also move. So while the last 2 decades belonged to the consumer goods, as we consumed soaps and shampoos and detergent powders, and even for that matter, autos and jewelries, I think the next leg of consumption growth as the country becomes prosperous, as the family becomes more prosperous, comes in services. So again, part of that is telecom we have seen, entertainment we have seen, but more recently, the 2 segments of the market where we see very, very strong growth post-COVID particularly has been healthcare, hospitals, and hotels. I think the incremental spending by a prosperous household, and we've been talking about K-shaped recovery and what's happening in the upper middle class and the rich segment of the market. I think these are the 2 areas. Second, I think penetration of health insurance. I think that's also a significant awareness has got created during the pandemic, and to that extent, that penetration is further helping and makes the certain surgeries affordable by virtue of having insurance. And lastly, even there are many insurance schemes for the lower middle class, poor, by state governments, by central governments, and that's also helping in terms of improving utilization of hospitals. So all in all, multiple factors coming together as the average household is able to afford these healthcare services, which were supposed to be premium, and obviously the awareness has increased. So to that extent, we have seen across hospitals, the utilization is improving, but more importantly, what's been driving profits of late is ARPP, as we call it, average revenue per occupied bed. And that's something which has been increasing fairly sharply, partly because of new surgeries that you are doing. So I think rightly so, both the hospitals and the government would be concerned that the healthcare should not become unaffordable for large segment of the population. And to that extent, there has to be certain middle ground where we can keep it affordable for the average citizen of the country.
Sure. All right. For now, the market is very quiet, so there's not too much happening. Just one thing that stands out is some of these power companies are doing very well. NTPC, Power Grid, the ancillary companies, Coal India, a lot of the PSUs are coming back in a big way. And although the headline index is very flat, there are plenty of stocks that are hitting fresh 52-week highs, so don't lose sight of that. Zomato, by the way, has been a stellar move. It's a fresh 52-week high this morning, fresh record high rather, for Zomato at 172 rupees. Tata Motors is almost inching towards the 1,000 rupee mark, so there's been a big move over there. Fresh high on Tata Motors. Data Patterns is another one that's up almost about 4.5%, looking very good. And then a couple of other names also stand out. But, just coming back to the markets, Anand, overall, what is your view on how things are going to shape up from here? Because the narrative is that it's been very steady so far, but there are no major triggers that can take the markets further. Of course, there are the elections coming up, but many people believe that it's already been priced into the markets. Your thoughts on how things could shape up from here?
I think last 3 years have been stellar. Last 3 to 4 years, very clearly, market has rewarded earnings growth rate. If you've seen through the cycles, as and when somebody disappoints on the earnings versus the expectations, the stocks have been sort of corrected significantly. At the same time, more recently, if somebody outperforms on earnings or delivers positive surprise to the earnings, market is rewarded also. And case in point is many of these state-owned businesses and banks that have done very well, given that there was a huge valuation comfort. They were relatively cheaper than the overall market, but they delivered positive surprises to the earnings. I think from here on, I think the investor needs to worry about both the upside as well as downside. We've seen a massive rally in the cyclicals also, and obviously cyclicals in an upturn will deliver superior earnings growth rate, but will also have a sharp earnings degrowth also. So I think from here on, stock picking will be very important to be in the right segments of the market, right companies within that sector is very important, and to that extent, investor needs to worry about both the upside and the downside, both in the markets and the equities, individual stocks.
All right. Hi, Anand. Good morning. Since you spoke about cyclicals, let's talk about steel. How are you all placed out there? You know, the fairest names in the last week, suddenly they moved up, and they moved up on very large volumes. CLSA, they came out with a note earlier today, and they're saying that blast furnace production is going to go up. So they rather play the miners than play the fairest names. They're also highlighting that valuation-wise, things are not very, very cheap. How are you all approaching them?
I think, again, the valuations is relative. And to be very honest, the steel manufacturers in general didn't do well through the calendar year 2023, given that the largest consumer and the largest producer of steel, which is China, had a very challenged time in terms of real estate and to that extent the demand. So I think it's been a laggard. 23 has not been great. And to that extent, the valuations were relatively reasonable, and they have sort of been caught up, or in terms of gotten attention of the market, given it's been an underperformer. To me, we've been overweight steel in particular within the metals, and across miners and steel manufacturers, we've been positive for the simple reason that over next decade, we are going to see, as China becomes more prosperous, its ability to compete in the international market should only diminish over time. And to that extent, overall, the profitability of steel sector in general globally should improve as China also decarbonizes, moves from blast furnace to electric arc furnace. That would also make it that much more uncompetitive on pricing. And to that extent, globally, we will see a better profitability for the steel industry. That's one positive. Second, a lot of companies in India had a very rough time through the decade. They have corrected, done the course correction, and that's also one positive for the individual.
Got that. By the way, Anand, just a few more names. Data patterns. What a move it's been having. I think a week ago, stock was at 1800. Not actually a week. I mean, maybe, but yeah, it was at 1800, 1780 or so, February. From 1800 to 29, almost 3,000 rupees now on data recently, and it's moving up as we speak. Another 8%, by the way, coming through. Saturday, and the price was up before that as well. So, very strong volume. NTPC is up 3, IEX is up 4% or so, and Zomato is the other one. A little bit, but mostly it's been moving higher. Especially on the government side, they are doing well. Policy Bazaar, by the way, since that the in-principle approval for the insurance business came through, that's up another 2.5% this morning. And of course, a week back or so, it was under 1,000, 1140 now on Policy Bazaar. By the way, overall market breadth is flipped into the negative now. So 1,250 stocks are lower and about 900 stocks are higher right now. Anand, across sort of sectors and, what kind of sort of changes are you making incrementally to the portfolio? Because what moves up with such ferocity that it kind of goes into from undervalued to overvalued in, a few weeks or so. So then you got to look for newer ideas. Is that something you're doing, and what exactly? If you can give us a flavor.
No, indeed, it's in a very interesting market. You are able to create wealth in old economy stocks, as well as you named few of them. even in the new economy stocks, there are various opportunities. So it's a very interesting market. We've been more bottom up. Our portfolios have remained overweight on manufacturing stories and the businesses which are allied to manufacturing, select banks that we have been owning. So our portfolio has been more or less stable, and we've been continuously scanning the market, both growth businesses as well as value businesses. We will find opportunities wherever, as I said before, earnings growth. I think what's been key in getting the markets right has been which are the businesses which are able to grow. India will be always watched upon as a growth market by both domestic investors, but more importantly from foreign investors also. And to that extent, where are we seeing earnings growth rate? And to that extent, even we are not surprised that mid cap and small cap have been, despite of our fears and premium valuations at which they're trading, it's attracting that much more capital because there are select, again, the word is select. There are select mid and small caps which are growing earnings far faster than what market would have expected. So overall, we've been watching more bottom up, not so much top down, given that most of the themes that we believed were value has played out. So it's more bottom up, individual businesses, both in old economy, new economy. More importantly, beyond manufacturing allied, the consumer facing services business is also another area where we see a long runway for growth, both organized retailing, hospitals, health, and so on.
Okay, Anand, thanks for stopping by and filling us in with your views on a whole host of sectors as well as on the markets. Wishing you a good Monday ahead, and we'll chat with you rather soon.